Morning, this is Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, June the 11th. Mixed two-sided trade here overnight following yesterday's crop progress and condition report and ahead of tomorrow's USDA data. Corn right now is steady to about a penny better. Wheat prices are mixed, up 1 to 2 in Chicago and in Minneapolis, down 2 to 3 in Kansas City. Soy complex mostly lower, down 3 to 5 in the beans, steady to about $1 lower in the meal, while bean oil prices are down to about 20 to 25 points. No big shocks in yesterday's USDA data. Corn plantings at 95%, emergence 85%, both in line with the historical average and slightly behind year-ago pace. We did see ratings fall 1% to 74%, good to excellent. However, it remains the highest rated crop at this point since 2018. Bean plantings 87%, emergence 70%. Similar case here, slightly below a year ago, yet in line or slightly above the historical average. Initial ratings at 72%, in line with expectations and the highest in 6 years. Wheat conditions did fall 2% in the winter wheat to 47%, good to excellent. However, it still remains the highest rated crop since 2021. We saw ratings increase in 8 states, declined in 7, while they held steady in 3. Harvest advanced to 12% complete. This is double the historical average and in line with expectations. And finally, in spring wheat, ratings did fall 2% to 72%, good to excellent. However, here too remains historically strong. USDA tomorrow, I don't expect any changes in the corn balance sheets with old crop ending stocks remaining just over 2 billion, new crop 2.1 billion. If there are any changes, I think it are likely to be via higher exports. I do look for the USDA to lower their Argentine production forecast 3 million metric tons to 50 million metric tons, getting a little closer to the Buenos Aires grain exchange at 46.5. In beans, I look for stocks to jump 15 million bushels on old crop to 460 million. This due to lower crush. I think they're going to hold the exports steady this month, as they do look for production in Brazil to be cut 3 million metric tons to 151. This due to historical flooding last month. And in wheat, all eyes will be on the USDA winter wheat production. I look for a 17 million bushel increase to 1.295 billion. This is slightly below the average trade guess, and at this point, probably well below what the market is trading given the recent price collapse. Chicago has closed lower now for 9 consecutive sessions and has retraced 68% of the rally from the March high to, from the March low to the May high. And prices so far, however, have held the $6 level and the 100-day moving average at 603 3/4. Spot July corn just continues to cling towards to its 50 and 100-day moving averages, just above 450, 452. This ahead of tomorrow's reports. Beans likely to chop around $11.75 to $12 level ahead of tomorrow's data. Here, too, we do have moving average resistance just below the $12 level. And in oil, that has yet to break out of last Thursday's range, a little bit weaker here this morning. July meal was able to break out a little bit here to the upside, highest level in over a week. This despite the funds remaining pretty heavily along. Weather here in the U.S., temperatures are expected to heat up by the end of the week. In short, that's exactly what the market or what the crop needs to help stimulate some growth. Midwest fields are currently well watered, but obviously the market will be on high alert if this high pressure ridge does get parked over here over the central Midwest here as we get towards the end of the month and into July. For now, however, without bullish data from the USDA tomorrow or a more threatening weather forecast, I think markets will try to drift back here toward and test recent lows. Thank you for listening, everyone. I hope you have a wonderful day.